It's November, and we're moving into the weeks of declining inventory with fewer homes, slower sales, and slightly lower prices. The market remains strong, of course, but it's a very different market from last year in the middle of the pandemic. This week, we'll look at the differences from last November and what that tells us for the start of 2022. Each week, Altos Research tracks every home for sale in the country, all the pricing, all the changes in pricing, all the supply and demand, and we make those metrics available to you before it becomes available in the traditional channels. So here's what the data tells us right now. So November 1st, happy Halloween. Hope you had a wonderful holiday with your friends and family. This week, there are slightly over 413,000 single-family homes on the market. Because it's November, a 2% decrease in available inventory week over week is to be expected. That keeps us on track for a projected 300,000 inventory count to begin 2022. You can see we'll roll down this way for the next few weeks. And assuming we stay on that normal curve, that means 2022 will begin the year with a third less inventory than we began this year. Usually the low point of inventory is mid-January, but before inventory builds for the spring. But this year we didn't hit the bottom of inventory until end of April. So now we're on an entirely different level of inventory cycle. As of now, there are no signs of breaking out of this cycle anywhere close to the old normal levels of inventory. Again, this week we had essentially zero homes exiting the forbearance process and being listed for sale. As forbearance ends, we're watching each week to see if any of these homes hit the market. So far, essentially none. Homeowners in forbearance are either working out their loans or perhaps extending the forbearance process. But as we've been saying, it sure looks like at most these will trickle onto the market just a few at a time, not enough to be noticeable in the inventory counts, and certainly not enough to cause any price declines. We're not going to have an oversupply anywhere in the cycle. It's been really fascinating to watch our immediate sales tracker this fall. While total new listings and the immediate sales rates decline for the rest of the year, the percentage of homes going into contract essentially immediately is remaining remarkably stable. It's about 25% of new listings each week that are gobbled up essentially immediately after listing, within hours or a few days. This is happening week over week. This week, 20,000 or so homes fell into this immediate sales category. November listings and sales rates tick down each week, with a big dip for Thanksgiving coming. This immediate sales rate, though, tells me that we have pent-up demand from ample buyers who are well-financed, and that trend is likely to continue well into next year. The biggest caveat for demand is whether and how quickly mortgage rates climb. The 30-year fixed is at 3.14% right now. It's almost back to its highest point of the year. So it's going to be fascinating to see how quickly consumers change their affordability calculations next year, assuming rates continue to climb. The median single-family home price this week is $386,000. That's down just under 1% for the week. It's the biggest weekly downtick since mid-August. It's November, so that's to be expected. The mega year-over-year price gains that we posted earlier in this year have moderated. In last year, the demand was so unseasonably strong well into November, that this late in the year, that our annual gains actually have to compress a bit. So, for example, last week the Case-Shiller Index reported its August number at 19% annual gains. That calculation, though, includes transactions from way back in June, July, and August. So it's way overstating the annual price gains that will close 2021 with. So the Case-Shiller is reporting 6 months ago, and we can already see the end of the year. The price of the newly listed cohort is also declined this week and will continue to drop through the end, really through the second week of January. That's the light colored line here. You can project the curve and imagine that we'll start the year at about $330,000. So right here, we'll get its reset by January. These indicators are all showing about 10 to 12% annual price gains by the time it's all said and done. I'm interested in looking for any signs of market cooling. One potential area here is in the percent of homes with price reductions, or percent of homes that are getting relisted each week. These are homes that were on the market, maybe testing a price, then maybe price too high, then no takers, so they get pulled off the market and then for a month or two and then relisted for sale. Sometimes relists are because contracts fall through. So in a cooling market, relists will shoot up. This rate also shoots up in January because homes get pulled off the market over the holidays and then relisted for the new year. Right now, our relist rate is 1.6%. Not skyrocketing, but it is slightly elevated over recent years. So this is one of the indicators that tells me that demand is price sensitive enough that 2022 will have slightly moderated, slower price growth than the last 2 years, which have been 10 to 12%. It's not at all bearish, just slightly elevated. So if a house is overpriced, it's not selling, and that's a healthy sign for the market. Finally, this week, let's look at the time to sell. Median days on market ticked up this week to 42 days from a low of 21 days earlier in the year. Normally, it's 70 days this time of year. The thing to notice here is how strong this late in the season last year remained. So demand in the fall of 2020 was actually accelerating. And what that was foretelling was how strong our Q1 was going to be this year. Like you could already see it in November of last year. We're in a much more normal cycle now where the days on market is climbing and will continue to climb until the spring market starts kicking in February. So, okay, that's all the data we have time for this week. Remember that if you're a realtor working with buyers and sellers, you're likely dealing with clients who have to understand the conflicting headlines about the market. Like, is it the hottest market ever with 19% price gains? Or is the market moderating a little bit? Your buyers may be still holding out for some kind of crash that isn't coming anytime soon. So they need you to get them the data. To do that, go to altosresearch.com and book time with our team. There's a link in the description below. We'll review your local market with you and guide you on how to talk about the data with your clients. As always, subscribe to the YouTube channel so you don't miss these videos. And you can register for next week's webinar. That's Thursday, November 11th at 10 a.m. Pacific. There's a link to register in the description below here. Click that, join us. We limit these webinars to 500 people and they've been filling up. So get registered now so that you can join us next week. That's Thursday, November 11th. Okay, we'll see you next Monday with the latest data and Thursday for the webinar. Have a great week.